Hey, what's happening, everyone? Aaron Jackson here with the Rotation Report. This is not financial advice. AI jumps the shark edition. And yeah, I think that's the big takeaway from last week. First, they were selling the software because of AI. Then they were selling financial services because of AI. And then Thursday, out of nowhere, a karaoke company turned into an AI logistics company and then sold off the transportation stocks, the trucking stocks, etc. I think we can safely say that AI has jumped the shark. And, I was thinking, when is the last time we saw something so fucking retarded? And boy, we have to go way, way back to December 2017. It was in the very peak of the Bitcoin mania of that time. It was the pre COVID Bitcoin high. We thought, before COVID came along, the Bitcoin was just dead. That was the peak there at 20K. So yeah, there was a company called Long Island Iced Tea, and they changed their name to Long Blockchain right there, December 21st, basically right there at the height of the Bitcoin mania at the time. And then yeah, you saw what happened after that. And I really do think that's our best comp here. Now you can say, well, how did AI jump the shark? Is it the fears about job loss? Maybe is it the just I think it's just the AI build out in general, maybe the data centers in general. And let's get into the next one here. Chart of the day. The internet is dead. Yes, the internet index. Look at that thing, a double breakout. Now, I think what's going on is all of a sudden, this AI agents just jamming up the internet. I'm getting weird, more like spam texts, emails, more spam everything just out of nowhere. And it's just like it's growing at an accelerating rate. So I'm thinking all these internet companies just are struggling really hard with this spam. And there's Google, there's Meta, there's Amazon. By the way, did you see Meta? The auditors like, yeah, we're not cool with this off balance sheet financing. But then Bill Ackman's like, hell yeah, it's a nice value down here. So even though the stock's up a ton, but whatever. Anyways, lots of room lower here in this internet index. You've got Booking Holdings, which has been getting smoked as another AI disruption, but you've got Snowflake and Cloudflare and great companies, but just very expensive. DoorDash, Airbnb, Carvana. So you can see some support there, maybe 7% away. But, I think ultimately we're looking at a situation where this can go get halved still 120s in the next year or two. But we'll see about that. And you can see on the relative chart, it's basically small cap growth versus value there, just rolling the hell over. Some support around in this zone. Sure, it can bounce a little bit, but bigger picture here is it's troubled. It is troubled. So the one thing we want to keep an eye in mind right now is all the semis, all the AI type plays. They're going to be telling us like, oh, the backdrop is so great, visibility for years. And of course they would. So the thing we want to be on the lookout for is something like an Applied Materials who gapped up on earnings. Is this like software at the end of October and early November where you have the perfect visibility, everything's good, and then you get the sell-off? So far, kind of hanging in there, but we'll see how it trades over the next couple of weeks. I'm not so sure about that. We've got Credo. They just announced that they're going to beat the quarter, right? Their quarter is so great, whatever. But this trade's like the internet index did a few weeks ago. You'll lose the 200-day moving average. You get back above it. And now, starting to slip again, starting to fall again. And very interesting price action in Micron lately. You notice all that momentum that had, it just died. And it kind of topped out right here at a extension target zone. But you notice the last few days, you get the gap fill, you get the little excitement in the morning, and then it sells off on the close. Next day, you get the gap down, but you get the gap fill, the excitement. Another one, gap down, gap fill, right? So that's interesting that those gaps are not reversing, they're just filling. And that's the key thing we're looking out for in general, right? We want to see, no matter what side you're trading, watch for gap fills, not gap reversals. Bullish, bearish, it doesn't matter. That's just kind of the deal. And, that's the interesting thing we're seeing today. Like you have that big overnight gap down, maybe down goes low as down as 1% in the NASDAQ, and then all the gaps get filled here. If you're a bear, you love seeing that. That's what you want, right? You want the gaps to get filled, people to get sucked in, all bullish, etc. So that's just one way to look at it. And so I was looking into the networking and that type of stuff. Like, who's going to benefit from all these AI bots just exploding, being everywhere, being pervasive? And it's Akamai. They caught an upgrade. They've got earnings in a couple of days, but you can see possibly just a giant range here in an uptrend, kind of over this old base here. So definitely keeping an eye on that one as the market pulls back. And then there's Fastly, this thing. Do you see this earnings right here? This earnings fucking move. More than doubled on the week on this volume? Check that out. So that's networking, traffic, and security. Yeah, that's on the watch list. Hopefully we get a broader market sell-off to participate in that one. And then you look at the software and it's like, okay, software is kind of counter to some of these trades, kind of uses the short and the semi-longs, etc. And ServiceNow, okay, it's trying to find a bid here. Kind of interesting, 105, this kind of zone. Maybe that's one to put on the list, but I think it's going to be challenged. But, you never know how things play out. And we've got small cap growth next. We've been keeping an eye on this old high area here, 337 to 339, 340, something like that. And it's just dancing around here like so many of these ETFs, just hanging in there, dancing. Yeah, definitely keeping an eye on that. If you don't take out next week's highs in IWO, or last week's highs in IWO, there's nothing to like there, really. It could just be another one of these double fake breakouts that we've been seeing. And then, yeah, so, okay. Now we've got bond volatility here, the MOVE index, and Friday might be the day that we get the tariff ruling. Who the fuck knows at this point? Jesus Christ. But, we do set ourselves up for a very interesting week because I believe it's NVIDIA earnings next week. And then, we've got the whole Iran thing. Oh, they're having talks, yada, yada. Basically, you're just stalling until the Olympics are over, right? You want to get everyone home from the Olympics. And then if you're going to start some shit pop it off in the Middle East, you're going to wait until that. I think that's pretty clear. But the bond volatility popping, that stands out. And then you've got the volatility index last week. They tried to knock it down. They really tried, but every day holding the 200-day moving average. So that's our reference point. As long as the VIX is above the 200-day moving average, definitely be on alert. They're going to try and knock it down. Everyone's incentivized to get that thing lower, but it's just like, there becomes a point when you just can't, right? And then, we've been seeing every dip get bought and every gap get filled, and that's fair because, like, look at this. There is fear in the tape. We've got the Bank of America Fund Manager Survey. That was pretty interesting. The sentiment in general is the highest since June 2021. So yeah, this kind of does track where you have growth falling off versus value, like starting to lag and looking to lag for quite a extended period here in general over time. So that kind of trades all kind of lines up there with the late 2020, mid-late 2021 setup. And the equity overweight is the highest since the post-election when Trump was elected, that December time. That was a peak in a lot of garbage. And then, yes, the commodity overweight is the highest since 2022. Oh, since the peak after the Russian invasion. So that's interesting. And maybe that's where a little bit of the data center is overdone. And so you're bidding up all the commodities based on all the use in the data centers. Maybe that kind of ties into the unwind. But in general, it seems like in general, people are pretty bearish on the dollar. So very interesting. We'll see how that reacts post tariffs. And then here's oil. I know they sold it off today. They're trying to sell it off. Ultimately, I think it's a lot like volatility. Like it's structurally just kind of stair stepping up to the right side of this base here. And if it can hold around this 200-day moving average, which in the futures is like 62.30, something like that, roughly, give or take, we're just keeping an eye on that zone. It sold off a little bit. This is from yesterday. But yeah, still hanging in there, still and that war premium isn't going to go away until after the Olympics and after a more final resolution is met in Iran. But I think that'll just about do it for me. So if you like the video, do me a favor and like the video. And until next time, friends, peace.